Assalamualaikum warahmatullahi wabarakatuh. My name is Akma ZULAIKHA binti ADZHAR.
My name is Ainin Sofia binti NURUDIN.
My name is KHAIRUNNISA binti KHAIRUL SHAHRIN.
We're gonna present about the FAST 610 Group Project 1 regarding the consolidated financial statement position. Question 1A. The accounting method that used to record the investment in Venus and Mars is acquisition method. It is because Mercury Berhad has significant power towards Venus and Mars. The percentage control of Mercury towards Venus and Mars is 60% and 70% respectively. Since Mercury Berhad has control towards the operating and financing decision of both subsidiaries, it is worthwhile to compare the company financial performance and financial position. The purpose of preparing the consolidated financial statement by doing the acquisition method is to achieve the above objective, which are to compare both company financial performance and statement. In the acquisition method, Mercury Berhad include all the assets of the subsidiary in consolidated financial statement and include all the subsidiary revenue expense in the consolidated revenue and expenses, and it will create a component called non-controlling interest, which is NCI. Is equity section, which represent the claim of subsidiary of the net asset. Percentage of the control. Mercury hold 60% of the Venus OSC and it will give the NCI 40%. Mercury also acquire all the percentage of the 10% debenture. In Mars Berhad, Mercury takes 70% of its OSC and its NCI is 30%. Mercury also acquired 40% of 2% preferential capital. Okay, next we go into the calculation of the goodwill of the parents toward their subsidiary. Alright, the first subsidiary is Venus. Okay, the consideration transfer of the parents to the subsidiary is 3,600, which is full in cash. So the NCI that we present before is 40%. The fair value of the net asset of the Venus is 5,200. Transaction that we record under fair value of net asset is any transaction that occur at the date of the acquisition and before of the acquisition. They are pre-general reserve, pre-return profit, and also ARR. In Venus, there is impairment of the goodwill that represent 5%. So the impairment is 24, which will reduce the profit. Okay, so the total goodwill is 456. And then for the Mars, the consideration transfer consists of the share exchange. The amount of share is 2,100 times with RM1.20. So it will give the consideration transfer by the amount 2,520. Okay, Mars also recognize the customer list by the amount of the 10,000 at the date of acquisition. So it will give the bargain purchase by amount 665. Alright. Mercury also acquired 40% of the PSC of the Mars, but it will not give any goodwill or bargain purchase at all. Same goes to the acquisition of the debenture in the Venus. The consideration transfer is 1 million, and the fair value of the debenture also 1 million, and there will no goodwill at all.
Okay, next schedule. First NCI. The figure of NCI from subsidiary we take from the calculation of goodwill before, and 3% of RPS we take full amount since parent not acquired at all. Okay, next written profit of Mercury. We start with balance carried down of 16,800, and then we minus or add any intra transaction between the parent and subsidiary. Okay, regarding the dividend, the parent we have to record the parent receive from subsidiary according to the percentage of control. Next, impairment of goodwill. also we take from the calculation of goodwill. So the total of retained profit of Mercury is 17066. Okay, next retained profit of Venus. Balance carried down 6,500. Then we minus intra transaction and the total of retained profit of Venus. We have to apportion it into 60% and 30%. Okay, next retained profit of Mars. Balance carried down 1,100 minus or add expense and intra transaction between the subsidiary, and the percentage, the apportion will be 70% and 30%. Okay, general reserve of Venus. Balance carried down is 500 minus with pre-general reserve of 100. The pre-general reserve is we get from the calculation of goodwill after minus in the bonus issue due to the issuance of bonus issue. So the total general reserve will be 0. Then general reserve of Mercury amount 4,000. So the total of GRP is 19636, NCI 7275, and group general reserve 4,000.
Next, we will proceed with the consolidated statement of profit and loss for Mercury Berhad for the year ended 31st December 2017. All the amount of SOPL of Mars Berhad will be apportioned into 6 months because the date of acquisition of Mars started from 1st July 2017. Okay, so for the consolidated statement of profit and loss, we will start with revenues. For revenues, we will deduct the intra-sales with subsidiary, which have 2 transactions there, and then we will minus with cost of sales. In the cost of sales, we will deduct one amount of intra-purchase, and we will add an amount of URP of inventory. Then we will get the gross profit, which is 33,450. Okay, for other income, there are consists of three, which are gain on disposal, bargain purchase, and PSD receivable. For PSD receivable, we will deduct it because it is a intra-transaction. For operating expenses, we will add the amount of 300 for under depreciation, 200 for amortization, and minus 100 for over depreciation. For interest income, the amount is 250. Finance cost, we will deduct 100 because it is intra. For finance cost, we will deduct 100 because it is intra-section. For finance cost, we will deduct the For finance cost, we will deduct intra-transaction with the amount of 100, and for the impairment of goodwill, the amount is 24. Then we have impairment loss of IA, and we will get the profit before tax, which is 18,501. Then we will deduct with the taxation, and we will get the profit after tax, which is 11,651. So the profit after tax that we get from the consolidated statement profit and loss just now, we will attribute it into parent and NCI, which the parent we will get 9,711 and NCI is 1,940. So the attribution of the profit just now, we have the working. The working are, we have to minus all the transactions occur before the current year, and the total will be apportioned with the NCI interest. So the total will be 1,940.
Okay, next we're gonna present about the consolidated statement of changes in equity. Before we prepare the statement, we have to prepare the working tool first in order to find the balance BD for the GRP and NCI. Okay, first at the balance, for the GRP, we have to minus for the return profit of return profit BD to the pre-return profit. But we have to prepare for the balance only since must Mercury acquisition must at in the current year period. Okay, so the return profit BD is 1500. Also same with the pre-return profit 1500. It's because the date of acquisition is on the first January 2070. So it will give the zero amount. Okay, for the return profit of Mercury, the amount is 10050. So the balance BD of the GRP is the 10050. Okay, for the NCI, we have the balance BD from the acquisition date of the balance, which is the amount is 2080. So the balance BD for the NCI is 2080. Okay, next we have to prepare the statement of the changes in equity. Okay, the balance BD before that we have from the working tool, we're gonna transfer them into the statement. Alright, and then we have to add any acquisition of the year. So for this case, the acquisition of the year is the NCI of the ordinary share capital and NCI of the 2% preference share capital. The amount is 1365 and 600 respectively. Okay, for the profit for the year that we attribute before to the GRP and NCI. For the GRP is 9711 and 1940 for the NCI. Okay, then we have to minus the dividend paid of the ordinary share capital and preference share. Ordinary share capital that paid by the Mercury before for is the that Mercury paid for the shareholder is 200. So we have to minus them on the GRP column, and then under NCI is 125. It is the NCI amount which come from the subsidiary. Okay, so the preference share of the dividend paid is 60 for the NCI amount. So the balance CD GRP is 19561, and for the NCI is 5800. And for the general reserve, we have earlier 4000 for the balance BD. So there will be no adjustment in the year, so the balance CD will be remain the same. So the three amount of the GRP and GR will have to transfer to the statement of financial position under reserve. Alright.
Okay, next, consolidate of financial position of Mercury Berhad. First, non-current asset. There are property, plant and equipment. The adjustment of PPE is minus 500 of URP, minus 300 of under depreciation, plus 100 of over depreciation, and minus 100 of impairment loss of IA. Next, goodwill 456. Next, intangible asset. The adjustment is minus 200 of amortization of IA. Loan to Mas, it will be nil since it was intra-transaction. Next, current asset. Inventories, there are the adjustment is minus 200 of URP. Bill receivable, the adjustment is undiscounted bill receivable of 50. Account receivable, the adjustment is minus 1000 of payment from subsidiary. Preferential dividend receivable, the adjustment is minus 40 since the dividend is received from subsidiary. And lastly, bank, the adjustment is minus 400 due to the cash consideration of 2% PSC. Okay, share capital and reserve. Ordinary share capital, the adjustment is plus 2100 due to the share exchange, 2% preference share, it will be NIM, group general reserve, group retained profit, and non-controlling interest. We get the amount from the net share premium, 2,100 times with 20 cent due to the share exchange. Non-current liability, there are 7% bank loan of 2,000 and 10% debentures. Next, current liabilities. Bill payable, the adjustment is minus 15 due to the undiscounted bill payable. Ordinary share dividend payable, we have to deduct the dividend from the parents, which is 80, which is 120 and 105. Next, preference dividend payable, also we have to deduct the parent amount, and account payable of account payable, the adjustment is minus 1,000 due to the payment from to subsidiary, and lastly loan from Mercury, it will be NIM.
Okay, for question 2, A, the area covered by contractual agreement, we have the activity, duration, and reporting obligation of the joint arrangement. Second, the appointment of board of director or equivalent governing body and voting right of the venture. Third one is the decision-making process, matters requiring decision by the parties and the required level of support for those matters. Next, capital or other contribution by the parties. And lastly is the manners of sharing among the parties of joint arrangements, asset liability, revenue, expense, and profit and loss. B, joint control. Joint control exists where the parties contractually agree to share control and decision about the relevant activity of joint arrangement, have the unanimous consent of all parties sharing control. The party have to assess the extent to which the parties should act together to direct the activities that significantly affect the return of joint arrangement. For example, Ahmad Berhad, Charles Berhad, Kamel Berhad are parties to an agreement where Ahmad have 60% of voting power and Charles have 30% of voting power, while Kamel has 10%. The contractual agreement between the three is at least 80% of voting right are required to make decision about relevant activity of arrangement. In this case, Ahmad and Charles has the joint control as Ahmad needs to consent of Charles to make decision about the relevant activities. Kamel is a party to the joint of arrangement. C, accounting treatment of each type of joint arrangement. In joint operation, the operators will recognize in their own financial statement their interest in the assets, liability, revenue, and expenses in joint arrangement. The investment is an associate or joint venture is initially recognized at cost, and the carrying amount is increased or decreased by the investor's share of the post-acquisition profit or losses of the investee. The investor's share of the investee's profit or loss is recognized in investor profit or loss. Next, we will proceed to question 3. For A, the relationship between Lily Berhad and Barry Berhad before the right issues is subsidiary arrangement because Lily acquired 75% of Barry's ordinary shares. Meanwhile, after the right issue, Barry becomes associates to Lily since Lily has significant influence to Barry. B, the goodwill. For the goodwill, the consideration transferred is 1,800 and we will minus with the fair value of net assets amounted 1,600. So we will get the total goodwill is 200. Okay, for C, gain and loss of disposal. The proceed on disposal is we will for C, gain or loss on disposal. The proceed on disposal
we will multiply 240 with the sale price, which is 50 cents, and we will get 1,120,000. For the fair value, we will take the remaining fair value of disposal, which is 60%, and we will multiply with the shares 600 and the market price, which is 5 ringgit, and we will get 1,800,000. So we get a total 1,920 million. And we will minus the fair value of net asset, 75% because of the percentage of control, and we did multiply it with 5 million, and we'll get 3,750,000. So the loss on disposal will be 1,830,000.
Okay, question 4. For the relationship of Aisyah and Adam. For the year ended 31st December 2017, Aisyah has significant influence to Adam Berhad. Since Adam is associate to Aisyah, it is because Aisyah has acquired 40% of ordinary share in Adam Berhad. Even though Aisyah acquired 50% of converted debenture, there is no increasement in percentage power of Aisyah in Adam because none of convertible debenture have been converted into ordinary share capital by 31st December 2007.